when I want to know what's happening in the market, one of the things I do is I speak to conveyancers and solicitors, and I have with me today Jared Zak from Dott and Crossit, the founder of one of the largest conveyancing businesses in Australia, and I think you're the largest in New South Wales, right?
We are. Thanks, Peter.
Yeah, look, thanks for coming in and joining us, and I want to get your pulse on the market to start with, because I'm looking for trends, I'm looking for clues, I'm looking for opportunities from an investment perspective, and you're on the front line seeing transactions go through every day. How are you reading the market?
Yeah, it's interesting that you fancy the opinion of a conveyancer. That's I like to hear that. I mean, we know nothing about where prices are going. That's for guys like yourself. But we do see some early indicators, which one of the things that I find interesting is noticing on each deal the amount of buyers on each contract, because we act for buyers and sellers, right? So when we act for the vendors, a really good sort of test of the market is how many buyers are asking for amendment requests leading up to an auction or whatever it is. So when the market was really, really hot, and this time last year, a little bit before, we were seeing around about, I'm talking about the Sydney market really, but I can comment on other markets later. But we were seeing probably about 4 to 5 buyers on average on each contract.
4 to 5 requests for amendments,
negotiating that kind of. Now I don't know what they're offering, but I can see they're interested in the property. Now, right now, we're seeing probably close to 1.5.
Wow!
So it's really fallen off from that perspective.
Is this New South Wales and Sydney only?
Yeah, I'm generalising a little bit. It's probably more Sydney. The reality is that even when the market was really hot in our Queensland office, we were probably only seeing 1.5 to 2 buyers on every Queensland property. That's just that market up there. I'm just not sure about that. Similar stat in Victoria, but Sydney, the hottest market, we've definitely seen that pullback. So.
And on the vendor side, so people bringing their properties to market, you need a contract to be able to market your property. What are you seeing on the supply side?
So an unprecedented amount of supply for us. Now, we're also growing as a firm, so it could be that we're seeing more contracts because we're growing, but we've never seen so many vendors sort of asking for contracts to be put together.
And how long have you been in business?
So 10 years. This year will be our 10th year, or 2025 will be our 10th year.
So this is the most volume of supply coming on the market in the past 10 years that you've been doing business.
Definitely. So yeah, I'm talking specifically about that spring period. So right now we're not getting too many instructions this week, just ahead of Christmas. But in that spring period, we prepared the most contracts we've ever done.
Spring 2024.
This 2020.
And so of that supply that came to market, you helped bring it to market. Has it been soaked up? Or is it still sitting there? Are vendors getting desperate? What are you sniffing going into 2025?
Yeah, it's not soaked up. There were a lot of exchanges, but we've still got contracts on the books. I think we're seeing vendors start to get a little bit more realistic. A lot of people are concerned about this concept of vendor paying, sort of distress selling. Definitely not seeing that. There's a handful. But I am seeing vendors who would make offhand comments to me like, "Oh, I'm not going to take less than $3 million for this, just so you know." And we just sort of take that with a grain of salt. And then you see a contract across your desk for 2.7. You think, "Oh, okay." So you just take note of that. So definitely seeing vendors' expectations getting sort of managed. So.
That's really interesting. What else are you seeing in the market other than the actual transactions of the contracts?
Yeah, so that's the Sydney market. I guess I'm generalising. That's where the vast majority of our transactions are. But what I am starting to see, both in terms of market movement, but also in terms of what's being supported by the regulations, is investors are starting to move back into favour. So for a long time, they were getting crucified by all the various sort of stamp duty, land tax sort of rules under every state and jurisdiction. And I think that the politicians are starting to realise that investors form a really valuable sort of role in the market, getting people in there or providing sort of properties for tenants. And you can see in Victoria, you'll be aware, they're probably leading the charge there, where they've introduced a new off the plan stamp duty exemption, which is available, very unusually, available for all categories of buyers, not just first time home buyers, not just buyers who want to move into a property, but also investors. So they want the investors to come back in. So that'll be interesting. New South Wales, probably not quite there yet.
They don't need to yet.
Yep. It's
probably but they will when they have to.
I think you're right. I think Victoria will lead the charge there. And we'll see what happens next year with New South Wales and Queensland. So certainly starting to see a lot of our investors. We've got some very savvy investors on our books. We're seeing a lot of them starting to look now in Victoria. We've probably had again, an unprecedented amount of inquiry in terms of reviewing contracts, particularly off the plan contracts in Victoria. So expecting that to continue.
The problem with Victoria is that they had previously a very generous regime for investors. And then they flipped it. They went from one extreme being the best and the most investor friendly to the other extreme, where they took that concession away, they made it difficult, they brought land tax, and they became one of the worst states to be buying property. And now they're winding it back because they've realized that to address the housing issue in this country, we need to build more. And if you want to build more, you need to sell more. And those sales need to go to investors. You need to incentivize investors. Where do you think the brand new market is at the moment in terms of supply coming on the market? Are developers feeling confident, or are they still scared and worried and don't have that confidence?
So I don't have too much sort of insight into the mind of developers, and the reason being is that we act on the other side of the table generally. So we're acting for buyers. But what I can sort of comment on the developer market, I mean, it was very, very chaotic after the COVID period. So a lot of sort of projects were pushed back. They went through their sunset date. We saw a lot of stuff, and particularly in Sydney. I don't know whether you took notice, but do you remember like sort of 10 years ago, what was happening was there was this concern that developers were sitting around on their hands and purposefully waiting for the sunset dates to go through.
Yep.
And they say, oh, look, sorry, we couldn't get the council approval. We couldn't build it in time. So we're going to just rescind the contract. And then the legislation came. And that was obviously because land prices were going through the roof and they could sell it for a higher price. So legislation came in New South Wales and I believe in other states and territories that effectively made it impossible or very, very difficult for developers to rescind in those circumstances. They could do it, but it was very, very difficult. Now the shoe's almost on the other foot in the sense that there's been these sort of generous sunset dates, which is generally what developers like, and you've had COVID and you've had just delays generally, and you've now got these projects that developers actually do want to complete, but they've gone through the sunset date and the buyers are saying, I want out of this.
It's the other way.
It's the other way around.
The buyer wants to pull out, not the developer.
And there's been a few instances where there was a classic one in Wollongong, I think. There was a big development down there where there was a sunset date, and your clients, Peter, have to watch out for these when they're reviewing the contracts, because there's normally a clause that developers try and put in the contracts that say the sunset date can be extended for a period of time attributable to a delay that's out of their control. That's too vague for me as a solicitor. I normally try and get that struck out. But they get in there a lot. And there was one down in Wollongong where there was actually a works order by the building commissioner. Are you aware of this one? He actually said you need to stop work halfway through the project because we're not happy with X, Y, and Z, A, B, and C, because the building commissioner is on a rampage at the moment. Now, at that time, all the buyers were spooked and said, oh, shit, there's a stop works order on my project. We want our money back. But the developer actually said, well, you can't. This is a delay. Yeah, this is a delay. And this is what that clause referred to, that there's a delay in the development, so you need to sit tight. So that's an example of where the sort of shoe's on the other foot with the rescission dates at the moment. But just generally speaking, still not enough supply, I don't think. I think that's not a controversial comment. You have a similar view on that?
I think supply will start to come based on government policy. I'm starting to see Victorian developers get more confident because that exemption is now back on the table. However, in New South Wales, it's a completely different story. We're also going into an election year next year. It's very unclear what each side of government is proposing as a housing policy. We've got an existing government that came in saying that they were going to increase supply but have done nothing. At a New South Wales state level, they've come in and said, we're changing planning, and they've done nothing. So governments are talking but doing very little on the ground to encourage brand new development. I want to go back to lessons. So you highlighted one very important thing, which is be very careful around sunset dates. What are kind of two more things that a buyer should look at, a sophisticated, savvy investor looking at buying real estate, that a not so good conveyancer will miss?
Sure. Are we talking about off the plan specifically?
Let's say existing.
Okay, so existing property, well, my rule in conveyancing, and I say this a lot, is that the longer that you give something to go wrong, in conveyancing, probably also in life, the more likely it will go wrong. That's the big thing for me. And that actually applies to both buyers and sellers. So I personally don't like settlement dates. Now, it's a bit difficult for off the plan. That's a separate issue, but you asked about existing property. I don't like settlement dates longer than the 42 or 60-day standard.
For a purchaser? or a vendor?
Actually, for both.
Okay.
Actually, for both. When I'm advising them, because in that period of time, you're in the market longer and you're wearing market risk and you're wearing counterparty risk. So, for example, like with a vendor, like we often have these deals put together where the agent will get this a record price. Oh, fantastic! You got the $4 million property street record. You look at the actual terms. Hang on, it's a 12-month settlement date. Well, in 12 months' time, house prices could have appreciated by 10, 15%.
Yep.
But the bigger concern for me is the buyer during that period. Anything could happen to the buyer during that period. Like he could lose his job, he could pass away, he could just abscond. And so if you're in that 12-month period as a vendor, if you're going out and shopping and buying another property, dependent on this settlement going through in 12 months' time, you're actually taking a lot of risk. So that's the vendor side, but the purchase side is pretty different. Is the same kind of thing.
Yeah.
You want that short period because your finance approvals don't last forever. Your own circumstances don't last forever. And if you need to sell a property, well, you don't have forever to do that. So that's probably my biggest basic one. And I think it's pretty easy to miss because most people are looking for fancy technical clauses, but I actually think focus on the settlement date. In terms of buying, I mean, the other thing that you need to be aware of, and I'm saying this now because we're filming this just before Christmas, so it's a bit topical, it's only really, sorry for your other states and territories that are listening, but it's only for New South Wales really, is a land tax adjustment in the property. Because land tax, as you know, that is struck at the stroke of midnight on the 1st of January every year.
Yep.
So if there's a land tax adjustment in the property, you exchange on a contract now and you settle on the 2nd of January, you as a buyer are going to have to pay the vendor investors entire year worth of land tax. Now, in the New South Wales contract, that is just a little tiny box on the 3rd page of the contract. Very, very easy to miss. But that's my probably biggest tip to look out for.
How much could that cost you on a $2 million property?
On a $2 million property, let's assume that the land value is $2 million.
Yep.
That's probably going to be a $40,000 mistake.
That's a big mistake.
Yep. And we've seen it done before. We've had clients who have gone to, we had a client in October and we'd reviewed 3 or 4 contracts for him. And we'd negotiate everything. And I think he was being a little bit embarrassed coming to us every time, missing out on the property. And he actually came to us on a Monday after he'd missed out 4 times. He said, "Good news. I won at auction finally on the weekend." And I was like, "Okay, great, but we didn't review that contract for you." And he goes, "Yeah, no, but I noticed previously there wasn't all that much, and I looked out for this, I looked out for that." I said, "Okay, well, would have been good to have a look at it." Now I looked at the contract, and yep, sure enough, there was a land tax adjustment ticked, and that particular mistake we worked out to be around $25,000, just because he didn't get his contract reviewed. So
Do it properly.
Yep.
One of the biggest talking points we have at the moment culturally and in the market is around foreign buyers and foreign investors. I've seen policies today on X about banning foreign investors, and there's a big misconception out there that these big, greedy, bad foreign investors are ruining our market and distorting it. But you see transactions. And from your perspective and your vantage point, how big are foreign buyers in the market? How many foreign buyers would you see, transacting? And are they a big chunk of the market or a small chunk, and are they distorting the market?
Right now?
Yep.
So we do about 5,000 or 6,000 transactions a year. We could probably count the amount of foreign buyers on 2 hands. I'm not joking. It's maybe a little bit more than that. So when I mean foreign buyers, I don't mean permanent residents. I assume you mean as well, any buyer who has basically decided to withstand the various penal surcharges that the state governments charge you to basically buy. And that's going up next year too, by the way. So it has worked. If that was intended to do, if it was to dissuade foreign buyers from the market, it has absolutely worked. Now, probably over to you as to whether you think that's a good thing for the economy. I mean,
my approach is if a foreign investor is coming to invest here, they're going to most likely buy a property and rent it out, and that increases the rental supply. If we want to address rental, we have to encourage development, and developers have to be able to sell to as many investors as possible. And so a foreign investor coming in and buying a rental property is actually good for us. It's good because it creates jobs and it creates housing supply. But we have a regime that's very politically driven, talking to a constituency that doesn't really understand. So I'm glad that you clarified that out of so many transactions, how many foreign actually come through your business. So they may be going through other businesses,
Yep.
but still, when you're the largest, you'd at least see a trend that would manifest.
Yeah, we get a lot of inquiry. I get a heap of inquiry, one every week almost, saying, hey, look, from an estate agent or a buyer's agent saying, look, I want to introduce you to a client. Can you talk them through the surcharge regime? And when I talk them through how much they're going to have to pay in addition,
Too hard.
they walk.
I'll take my money elsewhere.
Yeah.
I'll go and buy property in Dubai or somewhere else
Yeah.
where they actually want my money rather than discourage
Yeah.
me. And that's a shame because, again, it means Australians miss out. Our rental pool doesn't grow as much as we need to, and there's all sorts of problems.
No, I agree.
I want to touch on your business. You've had a very interesting year. Tell us a little bit about your business journey, the acquisition, the larger group, and how that's shaping up for 2025.
Yeah, sure. So my business, which I founded in 2014, Dott and Crossit Conveyancers. So I'm a solicitor by background. I worked in corporate finance in London. And when I came back to Sydney, I wanted a complete sea change. I was sick of being a small fish in a big pond. I wanted to be a big fish in a small pond, or at least I wanted to be, the master of my own destiny. So I decided to do something really sort of simple or simple relative to sort of high finance. I wanted to do conveyancing, and I wanted to do it really, really well. I wanted to do it differently. I also saw around that time that PEXA was just coming into play, and I perceived that there may have been an opportunity to really change the way and conveyancing was done, to really sort of but basically do it at scale, which was never really been done before, at least in New South Wales. So that all worked well. It's been it's been ups and downs. There's been some challenges, but generally speaking, the last 10 years has done really well. And as you sort of alluded to, the last couple of years we've been the number one conveyancing firm in New South Wales by volume. So I didn't really know where I was headed with all that. I always, in the back of my head, had concerns that a professional services business, which is so dependent on relationships, and I guess myself, would be very hard to sell. So I wasn't really looking necessarily for a sale. But having said that, when I had a couple of inquiries, I was definitely keen to listen to them and to see where they saw the value and sort of what price would look like. And so it was, about March 2023, I was approached by a local agent finder. So that's these guys here.
Yep.
You might have heard of them. They're Australia's largest agent comparison site. So if you're looking to appoint an agent, generally a sales agent, you search online, agent in my area, you're probably going to get this company come up first. And they sort of collate a whole lot of data. Some of it's sort of private or proprietary data, and they effectively put together a panel of the best agents in your area, and then they monetize that by making those introductions. Anyway, that's a very, very successful business. They've been around for longer than me, and they've done really, really well. And I guess they were probably also thinking, look, how do we take this to the next level? What adjacencies can we acquire? And they thought along the line that they'll get conveyancing in. So put an offer forward late last year, and it all worked for me. And, I thought I'm up for something different. And I also thought that they would really help my business sort of jump to that next step, because conveyancing it's still a cottage industry. It is still difficult to scale despite our achievements. I mean, we're the biggest conveyancing firm in New South Wales, but we would probably only be 2-3% of market.
Very fragmented.
Very fragmented. Very fragmented.
And so just to wrap, the last question, what have you learned as a leader?
As a leader, well, a lot, like a heap. Like, when I was, I basically learnt that there are a lot of skill sets out there that I don't have and that I should probably try and lean on. And that lesson wasn't really available to me when I was working it for myself, because I just didn't have the resources to hire a CTO, to hire a HR person, these kind of things. I had to sort of do a little bit of everything, and didn't necessarily do it all that well. So being part of a bigger organisation, I have learnt better to collaborate with sort of experts. So yeah, that's been probably the biggest lesson this year, is trying to let go of things, not try and not be everything to everyone. Yeah.
Well, I'm glad that you feel that way. I think it's very rewarding as an entrepreneur and as an individual to find your value and to realize that all the hard work that you've been doing over those years has a lot of value.
Yep.
And around the right people in the right environment, it can really excel and help more people in the market. Thank you for your insights. We're going to get you back next year.
That'd be great.
To share more of these insights. I really like your number of buyers per vendor ratio.
Yep.
You have to commercialize that. I think there's an IP opportunity to turn into an index or something. But until then, we're going to take it off you and we're going to share it with our audience. Thank you so much.
No worries. All right. Thanks, Peter.
Thank you.
Cheers, mate.